Hi, I'm Bill Moore, and I'm on a mission to add alpha to your trading through the power of relative value analysis. If you're looking for more candlestick patterns, this is not for you. But if you're ready to take it to the next level and trade like a professional, then stick around. So what we've done is taken the energy sector and broken it into 6 different industry groups and created a basket for each one of those and run all 6 of those baskets. Now, initially, the filter settings were 0.7 correlation, 0.8 for RW coefficient, 3 at least minimum winners, and a 5% up or down expectation value. When I did that, we got quite a number of things here. Now, notice that the majority of these things are in the upstream, and we've already put on a couple of trades this week in upstream, which is nice. I think there's a lot more to be found in there, by the way. Those guys are highly correlated, and there's just a lot of good stuff happening in that basket. But I wanted to take a look at this one. It's in the refining and marketing side, a little different place than what we've been at so far. Let's take a look at the analysis here. Both of these companies are quite diversified, okay? So it's interesting when you have diversified companies. They don't always have good correlation and good RW coefficient, but these two happen to have both of those things going nicely. Now, we can take a look here. About a year ago, something happened with MIC and it dropped like a rock, okay? And it really has not recovered. If you take a look, it has set a new range in here, right? So they had a nice range and a nice motion going. That whole range and motion simply has shifted down here because the value of MIC is different than it was before. And I haven't actually even looked up why. I really don't care. For the next year since then, the motion has also been very good, and it's in a good spot. Now, it's not actually outside the second standard deviation, but I think it looks pretty good. So the quick and dirty back test shows that it has been outside the second standard deviation 4 times and returns profitably every time, although the average time to get back is 103 days. So it's not something that comes back just in a couple of minutes or so. Let's take a look at it in the observe page. So no surprises here. We see the big drop that happened down here, and we've seen it waffling around here for about 5 days. I think that we wouldn't set the target all the way back up at the mean because it's in a new range here. So we'd probably set it somewhere in between, somewhere around in this area might be a good target. Let's do one other thing today because this is a small basket. Let's run over here and look at the principal component analysis. We don't look at the PCA in the normal daily videos we do because it's too intense. It's just too much stuff. But in fact, the PCA is the heart and soul of creating good pairs. It is how we create the RW coefficient. So we take all of the products, we run a principal component analysis, and then we create a model from that, and we see how each product does. So this is a graphic of that. These are the two symbols that we're looking at. And the scale here is in standard deviation. So if it was right at 0, that means the actual price and the model are agreeing 100%. But the reason I wanted to show you this is exactly what I like to see. I like to see that one product is under its standard deviation and the other product is over its standard deviation, because that way we are very likely to get some edge from either product, right? So sometimes there's plenty of edge between 2 products, but they're both under or both above. But this is actually the ideal scenario, right? We say one is actually overvalued, this is INT in this case, and one is undervalued, that's MIC. So this is a good looking picture. We'll spend some more time on PCA on some videos in the future. Okay, let's go to hitting probabilities. And we see a good mean reversion fit here. Again, those of you who watch this know that that's not like slamming down, but that's a good motion down. Currently, it's at minus 13.4, and we're trying to get to minus 3.4 if we're going for the mean. But I think let's not go for the mean. Let's put this at about minus 7. We'll leave that there. And let's run it with 10,000 iterations and run the simulation. So at minus 7, it says half the time we're going to hit that in 12 bars or less. That's pretty nice. And the mode is 6 bars only. So it's got a pretty nice time frame there. And in 30 days, This is just kind of telling us whether or not we expect to be profitable or not. Basically, 91% of the time it says we should be above this, right? It's a long trade. So, 91% and 9% being a loser in 30 days. But with any luck, sometime between the next few weeks, we hit the target price and we're out of this anyway. So I like this one. We are going to make this the recommendation of the day. So today's recommendation is MIC minus 1.79 of INT. It is a long, so for every share of MIC that you buy, you're going to sell 1.79 shares of INT. Good luck with your trading.